I'm Darin with Arbitrage Trade, and welcome back to another episode of After the Bell, where I just talk about how bad the markets are. With me
What?
today, we have my guest, Daniel Hopwood, who is an ex-institutional wealth manager, Josh Morgan, who works in real estate, and Royce, who invented all this stuff. And I'm Darin. I'm your professional poop
Hey,
thrower.
Keep your
hey,
damn hand off me, you damn dirty
hey.
ape.
I need to get control over these people. Jeez, what's going
I like-
on here?
Oh, wait, who are you?
I just wrote an executive
want
order just
publicity.
now that Daniel cannot be host of this show. I got the executive order. It was just written.
But I write the agenda.
All right, he already introduced everybody, I think. I don't know. I was too busy just looking around. Okay.
Incorrect.
All right. Well, this is After the Bell. You didn't say that. This is After the Bell, and it is Wednesday, and he's already told who all the guests are, so I'll just move right on in. We'll move right on into the markets. I couldn't tell if that was me speaking.
Darin, tell us how
AI, if he
everything's
was
falling
AI.
apart today.
Oh, okay. You stop. You're still hosting. Stop. All right. I have to hold on to something here. I mean, jobs are tough to come by.
He just took that one by the horns. I like it.
Yes, he did.
Look at me. I'm the captain now.
Just want to point out that GLW is $50.01 right now.
That
I
is
know.
not on the agenda, but no, we would talk about that. If it was 50, if it was right at 50, what would we do? A coin toss?
I mean, I saw it dip right at close.
All right, we'll talk about this at the end, but I have an idea for how to determine who goes first too. On top of and a few things because we have like 3 weeks left to we're in a new season, right? So
actually, I think there's only 1 week left.
I thought we were 18. And it goes to 20.
If you look at the scorecard, there's only slots for 20.
Okay. All right. So let's get started here with the.
Right now, there's no way for me to win. Josh definitely could still win, and and Daniel could wind up in third place, leaving Darin as the cheese.
Okay, so now there's another host that's trying to take over the show, and his name is it is his company, and he did come up with it, and it's the only reason we're all here. So I will shut up. You want to host? I do like your hat though. I'm on that team. I'm on team tinfoil. All right, here we go. Let's talk about the markets. And that's what we try to basically start off every week with is what's going on in the markets. Basically, Powell had his jawboning going on today. Pretty much everything stayed the same. Nobody's surprised. Everybody said that's what would happen. The only thing that kind of got a little jitteriness going on was the fact he said that inflation is still an issue in his own special way. But we all know it's just all about the algos and where they're going to go and how to justify where they're already going to go. So we know that stuff.
But we would never say that.
Yeah. Oh, DeepSeek though was a problem. It's interesting. Like Daniel said, it's in his what he wrote out the agenda is that we already knew this. We talked about DeepSeek a couple of I don't know, was it weeks or months ago? I don't remember how long ago it was, but we already talked about
DeepSeek was published in December, right? So we've known about it for more or less like
a couple of months.
months.
Yeah, and we already know that if there's going to be a technology that China's on it and they're already working on it, and eventually, whether it be Nike shoes or whether it be a shirt or whatever it might be, Nike's already going to have a knockoff of, or excuse me, China's already going to have a knockoff of it, and they're going to introduce it to the market for cheaper. That's just what they do. It's cheaper China. That's what they are, and so I don't know why anyone's surprised, but it did bring up a lot of what we had been talking about, the problems with AI in general, maybe. And we'll talk about that a little bit later. Yeah, we'll talk about it a little bit later. We are back, like you said, we're back to where we were. We recovered over that. No surprise there either, because that's what happens. There are some analysts out there that did say that it should have gone back a little further. There shouldn't have been just a little 3 to 5%. It should have gone to the 10%, etc. And something's going on that we don't really take that drawback like we need. And one of those things that they might be waiting for is for the other shoe to drop, which I brought up several times, which is the yen carry trade. The media has already said that, hey, They want you to think it's all done. Everything's taken care of. We can move on. That's old news. But no, there's been facts and figures out there that prove that the carry trade is not over. And Daniel, what did you want to say about like what did they raise it? And there wasn't any news out there?
Well, yeah, so this was the kind of the interesting thing with DeepSeek about it being most likely a cover story, because like we had said, we had talked about it for 2 months, right? And it didn't really get too much press coverage. But then all of a sudden, over the weekend, when the Bank of Japan raises rates by 50%, which they didn't do originally because they had, you know, the big market worried and everything sold off, they actually did it this time, which squeezes the yen carry trade. All of a sudden, this DeepSeek thing is extremely popular and takes over Twitter. And you don't hear anything about the yen carry trade getting squeezed because of the Bank of Japan. And normally, I'm not always on board with Darin and his conspiracies, which are sometimes true, right? But this is one of those things where I'm like, oh, this is I know you're pretty much Alex Jones, right?
Except, all right, what else to talk about this? Let's talk about this yen carry trade. All right, go ahead.
I know it doesn't sound like you eat rocks for breakfast, but but this is one of those ones where it's like, oh, this is like a very interesting potential like media cooperation of like covering up the story, because you know, sure, the DeepSeek thing is interesting, but like it is 2 months old. Like, why are we all of a sudden interested? And like, I do think one of the other interesting things is I think it was like NVIDIA was responsible for 80% of the general market correction because of its weight in the S&P, because it fell, you know, 12% in that one day. And like, you know, Microsoft, I don't know, fell like 3% and then like quickly recovered, right? But NVIDIA is the only one that was like majorly down.
Well, don't forget that, and I'm not saying it to you guys, I'm just saying it to everyone else out there that, I mean, AI, you got Apple Intelligence, you've got all these different companies that are trying to develop their AI, Google, everybody's doing it. So eventually it's going to be, and I have heard some actually finally start to admit this, because I guess now they can in the master plan, is to admit that it's a commodity. This AI information is and these different systems are just a commodity that they're all going to pull from, because no one's
Darin, did you see
off.
that Apple Intelligence is so bad that analysts don't consider Apple an AI company?
No, I didn't.
Yeah, it's so bad that like none of the analysts are like factoring into like, you know, they're like, you know, discounted cash flow of like assessing Apple as an AI company. Like Tesla gets a better multiple as being an AI software company than Apple does, because it's like, well, there's some logic there.
No, the logic is they're planning it out to when actual Apple pulls back like it should, and then they can release it. Oh yeah, well, this is a legit AI now, so now we have an excuse for it to go back up again. It's all planned.
Well, as soon as they have good autocorrect, I'll believe it. But.
Just like Google. Remember when Google was not considered? Yeah. They didn't have a good enough AI, and then now all of a sudden they do. It's just a matter of playing with where the charts are going, as we always say, because it's, as Royce says, it's a closed-in system. It's just a matter of justifying where it's about to go. So we create news, or we hold back news, and we wait and release it at a certain point where that move will make sense, in my opinion. Because Royce has taught me well. Yep. What? And you want to jump in here, Royce, on anything that we've already talked about here? Because they really didn't give me a chance. The yen carry trade, I'm more curious to hear what your thoughts are on that.
Well, with them raising that rate, I do expect to see, and I even said it in the Sunday seminar, Japan is literally getting ready for a move. The JXY index is literally setting itself up, and basically all of the other countries are just taking note. It's like, hey, we can't park our money here anymore. It's costing too much. And I want to see basically if it will actually slow inflation, because basically if it becomes neutral as opposed to currently it's buy. It has been buy as much in as you can get your hand on for years. But now basically Japan has no longer a need for them to hold as much in. And they're like, yeah, we're going to charge you for holding our yen, so you can switch back to yours now. And most of them know, like, we don't want to switch back to ours. And so they're fleeing to the dollar, and they're fleeing to this, and they're fleeing to gold, and they're fleeing to crypto. They're fleeing anywhere but back to their own currency, which That makes it a little bit scary in the overall forex world, because it's like, okay, all these countries don't want to be in their own currency. That doesn't seem to put a lot of faith in their own money or the geopolitical standing of Europe or any of these other countries right now. So it's just kind of scary out there. And Bitcoin is making a move, Satoshis are making a move, Trump, Melania, Elon, they're all making moves in the cryptocurrency space. So it's like, hey, people are just trying to hide money wherever they can right now, but it won't be in Japan.
So where is it going to be now? Is it Switzerland? Where is it? Where is it going now? Where's the money going to move to?
Every time you have to go out, every time you transfer between any central bank, you got to go through the dollar. So I'm still saying dollar 118, baby, 118.
What are we sitting at? I see it. About 108 basically right now.
Yeah, 108. We got.
Sounds like it's going to be a good time to travel coming up.
yeah, it will be.
There's never not a good time for you to travel, Daniel. You cannot speak on that. We should send him all of our dollars.
British pound at $1, the euro at $1, not 127, not 124, not 110. $1 versus us.
What is that called? What's the term for it?
Equilibrium.
It's 1 for 1.
Parity
for it. I can't remember. Dirty? Did you say dirty?
Price discovery.
Parity.
Dollar still the
parity.
king.
No, okay. Yes, parity. Maybe that's the one I'm looking for. The only other thing that we're going to talk about here with the very intro in the markets was, two things still actually. Colombia and their coffee futures after Trump. See, you can recap that story for us, Daniel. I think you have it a couple of times on the agenda, but go ahead with it now on the Colombia and the taking refugees back home and all that stuff.
As we all know, Trump actually somehow managed to keep his word of deporting a bunch of people right at the beginning of his administration. And pretty much there were two military cargo planes that were trying to land in Colombia to return illegal Colombian migrants, right? And when they went to land, they essentially were like, you can't land here. And, Trump got word of that and he was like, okay, 25% tariffs. And they were like, no. And he's like, okay, 50, right? And they're like, I think it was within 4 or 5 hours, they caved. And, I read a little bit about the implications of Colombia having 50% tariffs on their goods. The U.S. is their number one trade partner. They export 1/3 of their coffee to the U.S., which is their biggest export, amongst a few other commodities. And pretty much, if they were to have that happen, well, yeah, but those funnel through, Mexico, right? So these are coming direct. And pretty much, it's if they were to implement those tariffs, it would crater the Colombian economy, because obviously we can kind of buy coffee from wherever. And it was, I think a really interesting kind of play of America's power. And if somebody doesn't want to play with us, what we're willing to do. But it does make me worry about, how when America kicked Russia off SWIFT, we thought oh, that's not going to be good for Russia. Actually made their currency the strongest it's ever been and enriched Russia more than it ever has been before. Obviously, Colombia is a different story, right? They're not a world superpower. But I think the other interesting part is that coffee futures have continued to spike, even though they've, agreed to our terms. So I continue to wonder what future effect all of these tariffs will have. And I'd love to get your guys' opinion on this story.
Before I move it on here,
it's kind of crazy.
It reminded me of the Breakfast Club, right? When the principal and the after school, right? And he walks in. I mean, imagine Trump is the principal, whoever that guy is in the Breakfast Club. And it's you remember the dude kept talking back and he goes, okay, that's another day. And then, okay, that's another day. It's like the Colombian guy was saying, hey, well, we're going to go 50%. And Trump's like, or the Colombian guy said, no, we're not going to allow him to land here. And then he goes, well, okay, that's another 25%. We'll have to see if he does that with all of the tariffs. Okay, Banker, jump in here.
Television. He makes.
Oh, yes. He really, no, he does. Absolutely. And this new press secretary, we won't get into that, but she's been kind of funny too. Go ahead, banker, with anything we've talked about. You haven't had any say yet, so jump in there.
Oh, I mean, it depends on which topic. I mean, I'll just start with the coffee. Where,
Okay.
I
You
mean,
did last time. Go ahead.
yeah, that to me, that's kind of obvious. Like, we talk about uncertainty in the markets and market volatility, and now we're throwing in a new volatility called presidential volatility, because this dude's literally like at any point in any given day on a whim, if something doesn't go his way, he's like, bam, tariff, bam, tariff. Okay, bam, 25%, 50%, 100%, 1,000%. I don't care. And I mean, like, the market is reactionary to all of this, but they want to go somewhere where it's going to be safer and stable, rather than, where they can see a future. And if you've got all of these various factors, and now you've got another factor to deal with, which is, holy crap, is my coffee going to go up 50% in price? Yeah, it makes perfect sense that futures would go up. Then you factor in, I think we talked about maybe last season or something, or a couple weeks ago, I don't remember, but about how we've got all of these like climate change issues that are causing coffee prices to go up. And we were thinking that they were also looking forward and seeing that that's going to affect us, 6 months, or yeah, I guess it was about 6 months ago. We were going to start seeing effects of that about this time in, January of 2025. And now here we are, we're seeing futures actually rising a little bit. And I think it's going to kind of continue on as as everything goes.
Volatility means that you can make money up and down, and I think a lot of traders love volatility, and that's what they look for, especially in options, right?
You can if you know where to put it. But if you're just basically reacting to the whims of another person that happens to be, the leader of the free world, volatility, it can be a double-edged sword.
But if you
can, unless you know how to play it.
If you're playing both sides, you don't care which way it's going.
Exactly.
Yeah. I mean, yes, but
you could make it both ways. That's right.
I mean,
as you will learn in my book that's coming out.
Yeah.
The
straddle is a lot more difficult.
There you go.
You're making
always be the seller. Always be the seller.
I heard you have a really good band too that will be coming out soon.
See, Royce's arbitrage on coffee futures is just switching to sugar-free Red Bull.
I know, I do sugar.
Okay. Now we got too many commodities in play, though. Okay, that's risky.
Yeah. You did put a lot in this first part of the agenda. I'm trying to move it along, of course. The one thing that you and I are going to talk about.
I'm sorry.
No, go ahead. Finish your thought.
I saved myself. I didn't say he was going to grab them by the purse strings.
I know what you mean by that. Let's just
say
that while you were gone, Royce, there was a certain animal walking around Daniel's house. So you can connect those two dots. All right. So, all right. And he even jumped up in his lap. All right. So
oh boy.
that's not previous video, so it's not in this. Was before we started. Anyway, the last thing in this first part was a couple of things. It's the market cap. You mentioned GDP hitting 203%, and now, since you and I are going to be talking about this on our own deep dive, I know that you're referring to the Warren Buffett indicator. So you want to talk about that real quick?
Yeah, so Warren Buffett has a simple formula of taking the market cap of all the companies in the S&P put together, dividing it by the GDP of the US, and anytime it goes above 100, it somewhat shortly after has hit a recession in the market. Happened in the 2000s, happened in 2008. But currently, can anyone guess where that market cap sits if you didn't read that part of the agenda?
If you didn't hear me.
Oh, Darin, you did say it.
I did, yeah. So an all-time
high.
It's at
203. It's double what it's been in the past.
Yes,
Right.
and we were worried when it was 100. So I mean, it's like we should be. That's why the doomsday clock, which is in a previous edition of the Three Things. See, I do get my plug every week. The doomsday clock is what, 84 seconds or something now. When it's been like, you can see it over the years. It's a neat little clock that you can look up the doomsday clock, and you can see it's been like 2 minutes away, 4 minutes away, 7 minutes, and now it's all the way up to as close as it's ever been, which is 84 seconds. And that doomsday clock is an indicator of how close we are to total destruction. So, but don't be
Oh.
scared.
Sweet.
But now this hitting too would be another indicator that, I mean, we've doubled what we even when we were scared at 203. So, and I've said it over and over again, and I'll say it again this week. Fred reports are their indicators are also just like doomsday everything. So, I mean, this is just crazy, but you won't see it on the news. That's why we have to talk about it here over and over again, because they won't say it.
But you got to put a little bit more perspective on it. Like, if you go back to like 99, 08, 2014, I believe, like every time that Buffett indicator had tipped over 105 to 115, we immediately had, I mean, within a year, we had if not a full-on crash, full-on recession. I think 2014 was the only exception, and it was like a correction of sorts. And here we are. We've been riding at 200 plus for the majority of this of 2024, now crossing over into 2025, and it's still continuing on. And it, you know, it kind of goes back to what the whole issue we had with deep fake and I call it deep fake because that's exactly what it was. But that DeepSeek issue was they were kind of testing the surface tension of that bubble, because it really did. I mean, we really, really did come close to that bubble, that AI bubble, that tech bubble actually crashing and burning, and off some kind of BS fake news that had red flag after red flag after red flag. I mean, we've talked about it before. The numbers are going absolutely insane, like credit card debt, defaults, like savings accounts are going in the negatives, like layoffs. You know, everybody is like quitting. If they haven't quit already, they're being offered severances, like what Trump is doing in the government. New hires are going down. Like, there are so many red flags in this market. It is terrifying. And I mean, I know we've kind of, everything's been all sunshine and rainbows. You know, not like
everything is awesome.
Not like Jerry Jones said it, but
and moonbeams. Don't forget the moonbeams.
Right. And like, it's all, you know, it's great because, and we've all been riding this high, but at the same time, at some point, profit taking is going to start mounting. And profit taking is, and if it's not profit taking, it's going to be another bubble story or oh my gosh, crash. Because I mean, I guess the point I'm trying to make is it really told you how anxious everybody is around this market. When you've got something that is obviously not true, obviously comes from the red state, you know, and it was backed by some tiny little hedge fund based out of China, and the whole freaking market completely lost their ever-loving minds. And I mean, you're talking about sell-offs in the 30% range. And it just, I mean,
not overall, but yeah, in specific stocks, yes.
Yeah, that's what I'm saying. Certain, like specific ones, you know, some of the fringe AI and some of the ones that aren't as stable as like NVIDIA. It just shows you how fragile this whole situation is.
It is, it is a bubble, in my opinion, and it's amazing how much just liquidity can hide stuff, and it's hidden it for the last year, and as the Treasury or as the Fed keeps pulling down how much money they have for overnight repos, et cetera, you can't go to Japan now. I mean, it's getting more and more expensive to try to get your hands on money that you need to cover up what you have covered up for the last 3 years. So as that gets harder and harder to get your hands on, then it's going to eventually bust. And that's all it is, in my opinion, is it's just been kept pushed further and further and under the rug. It's there and it's been there, as this indicator is even giving you. And again, it's all the Fed reports tell you, but it's just getting hidden right now. But it's eventually going to have to pop. It absolutely is. I mean, and that's why even I think we're averting, like when this news came out, we didn't drop 10%. It's because there's still enough liquidity out there that they're trying to just keep it under the rug. So eventually they're going to have to, and I've said this before. Remember, I said June. We'll see what happens. But my predictor has been June. On absolutely no evidence at all. All right, so let's go.
Well, at least he's honest.
Yeah.
Mhm.
I do have
wish,
it, but it's not worthy to be aired. I'll just say that. All right. So
I
it's
wish
worthy. I
that
just
the arbitrage bands worked for yield curve inversion charts, but unfortunately,
oh
they're
yes.
line charts and not candlestick charts.
The big thing
Yeah.
is if the
If you can
10-year
get me
hits
data,
5.
bet.
I was about to say, like, you may have just given Royce an idea. Like,
Yeah.
If you can get me the data, bet.
mhm.
I mean, there's
Yep.
a chart on TradingView, but it only ever comes up as a line chart.
Just wait till the 10-year goes between 5.8 or 4.8 and 5. Then we'll see what's happening and see how much even bigger that bubble gets. And then once it hits 5, I keep saying that, yeah. Once it hits 5, that's when everybody's saying that run for the hills. All right.
So my question is,
Yes.
well, how big can a bubble get before it's an actual ecosystem?
You mean essentially resetting a new normal?
Yeah.
Right. I mean, we keep hearing new normal, animal spirit. I'm so tired of some of these terms.
Animal
Every
spirit.
freaking time. Animal spirits is
didn't
the
Stanley
one that's
Dra-
been out for the last month. And it's like they all get together, just like the rest of the news. And this your tinfoil hat, but they all say, okay, this is what we're going to say for the next 2 weeks. Let's all the investment firms. They're probably in Davos, all in a circle, something. And they were all saying, hey, next, we're just going to talk about animal spirits now. That'll keep everybody.
Is that because Stanley Druckenmiller said there are animal spirits in the market? Which I was like, oh, okay, he's old now. He's losing it.
That's what they're saying over and over again now. It drives me freaking nuts. And the new normal they've been saying for the last 2 years. I mean, it's been crazy they say that because they just want you to think that everything is fine, just like everything is Lego world. It's what
My thing is, my thing is with I don't know. I look at real estate, right? We're never going back to where housing was $25,000 and $30,000 a house, even though that's where it was in the early 80s. We're never going back there. The new normal is like, hey, the average house is $250,000. So it's like if everything keeps expanding, as long as the money and the supply of money keeps up with what the expansion is, there's no crash. There's no basically. And what I call a crash, a lot of you guys probably won't call a crash. I call it price discovery. Basically, the market will settle down to where it thinks it should be valued. That's all a crash is. It's saying, hey, the dollar got this much stronger, so this is what this buys now. The stock didn't actually lose any value. The dollar just got stronger. Yeah.
I was just gonna say the average house is at 450 now. We've talked about that. So it's
really?
Yeah, crazy. It's crazy. It's absolutely crazy. And people are not buying existing homes.
Trust me.
People are, they're not buying existing homes. They're buying new houses where the developer can go in and give the house away, so to speak, and upgrades and everything else.
I got cursed out by a real estate agent a couple weeks ago because basically I made someone who was trying to buy a house ask if they could assume it as opposed to just buy it.
Mm-hmm.
Yeah, it's probably not good. And then you're out there telling about how you can get the equity back.
Yep, absolutely.
So you could have the bankers and the real estate industry on your butt.
Hey,
I don't know why the agent would be pissed though. You could still roll some commissions in there.
Yeah.
Mm-hmm.
Well, he was. Well, I guess they won their 3 and their 1 or something, whatever the splits are now.
Yeah, but you don't have that anymore. Not with these new real estate agent rules, like that they rolled out back September, August, or something like that. Like you don't have to be stuck at the 3%. Like you could absolutely work out some other form of payment or commission.
Yeah.
Like
sure.
But an assumption, basically, all you get is what the bank gives you from the closing, and normally that's like 1.5% of whatever the loan value is. So, yeah, can't live off of 1.5%, even on a $400,000 house.
Yeah, loan assumptions are just risky, especially for like a lot of lenders. Just will tell you no.
Yeah.
Well, they don't have as much.
Kept secret. That's how the rich people buy their houses. They don't just go out and buy houses. They say, "Oh, you were rich. You were rich. Did you assume it? Can I assume yours? I'll pay you out the equity," and they go about their business.
because rich people have the collateral to back it up. Like they're not going to do a loan assumption on somebody that they're just basically rerunning their credit report.
Hey, it's all debt to income ratio.
I mean, a high qualified candidate would absolutely, they might consider it, especially if their numbers worked better and their numbers work in their favor. But they're also going to want that 7%.
Yeah. The person I was talking to was $830,000 duplex that they were trying to get. Already had renters on both sides, and they're like, "You ruined this." Sorry.
That would have to be some astronomical. Yeah, there had to be some astronomical rent to get $800K on a duplex at 7.
It was in Dallas.
Oh, well, then it probably was astronomical.
Yeah. But,
all right. Well, we actually rent's still terrible right now too. So it's in fact it's one of the things that's still keeping the cost of living and the consumer sentiment and everything else. Which again, I think is they target places where they know they'll get the answer they need, like all surveys are in general. So let's go to
we tested 4 men to see if what they think about women. Wait, where were the women in the survey?
We do not have one represented here. We shall not talk about women.
I don't know. I saw a shawl in your office once.
Oh, she left it? No, I'm just kidding. All right.
Who did, Darin, your boyfriend?
They're not talking about you. Just quiet. What?
Yeah. Well, at least he looked over there and he didn't look down.
Oh boy, we better move on quickly. In fact, Royce, it's time for your segment. Let's talk about after the bell here. Crayons and charts with Royce Wells.
Let's do that.
Yes, let's move to it. And what chart quickly? Which chart are we talking about?
I made him blush, folks. All right.
Nothing's going up here and widening out. What do we got here? AAON. What does that stand for?
AAON. This is Producer Manufacturing and Aon Inc. I saw them because I was looking in TradingView Screener. And I was like, well, okay, we got a screener from TradingView. It's looking at different prices. Then I ran it through the arbitrage filter and saw that, hey, this guy might be a good candidate for falling down. And then basically, why we say falling? Because typically when an arbitrage man makes it to about 70% on a Z Pro, we're going to fall down. And it's already about 4 to 5 days into this fall down sequence. Let me turn on the Atlas and make sure it's set to monthly. Let's put it down to 4 hour to see if we got a X yet. And yes, sure we do. We got dollar signs telling us that we should have been taking profit. And basically we got out just in time and then it fell nicely. How far will it go? Well, currently, in order for a downtrend to succeed on this guy long term, it actually can make it all the way down to about $82.06. So that's about a $30 haircut from where it currently is sitting. The question is, will it actually make it there or will it bounce? Well, that's when I bring in just a little bit more data to see where it is. So looking short term, looks like the arbitrage band will actually stop it somewhere around 103 short term. But if probability does win out, we can make it down to about that $80-something mark in maybe a couple of weeks with heavy support around the $63 mark. Looking at this on the weekly time frame, this is the beginning of death. We're sitting outside the apocalypse band, have been sitting outside the apocalypse band for a minute. The apocalypse band starts at 104. So at the very least, AAON is going to 104.58 at the very, very least. And from there, I'm going to definitely say that weekly time frame, it might be a very, very, very good opportunity to leave this guy and not look back for at least 3 years. Because this is the weekly time frame, and it says an apocalypse band. So if it starts falling, it may just start free falling. So if you're in AAON, take your profit before it takes you for a ride. That's all I got, guys.
We'll call AAON the Tom Petty chart because it's free falling soon.
It's
All right, I
free
had to
fall.
get that in there.
But
Free falling. I had to sing it because that's just what I do. All right. So
Did you
You
though?
call it singing?
it's always karaoke night at Arbitrage with Royce and I here, at least.
Yeah.
All right.
I back him
So,
up.
and you do you look at the banker? Look how big he was smiling. Well, he okay, because we're at that time of the. I'm waiting to see Royce's frown, but we are looking.
Uh-oh. All right, let's hear it.
Except this week it's been a trend. We have a trend that's happening on the scoreboard, and that trend is what? It was JPM was the trend.
Yeah.
Yeah. And wait, I'm thinking
we have a clear winner. Give a clear winner.
Yeah, it wasn't that clear. We had a $5 swing here, in the last 2 or 3 days? Or what was it?
2
It
or
was
3
crazy.
days, yes.
Yeah, I mean, it was down, up, down. I mean, it was crazy. It was like a Friday
I'm not
night
talking about
at your
just this
girlfriend's
week.
house.
I'm talking about for the season. For the season.
Oh, yeah. I'm talking about
Yeah.
this specific week.
Even if I did my best, I can only tie this man. So
Mhm.
kudos, sir.
Yes.
Kudos.
So I have pulled up the chart, and as you can see, I thought you won, Royce.
I
You
did.
win this week. Yeah.
You pulled up
Put
the
it
wrong
in.
one.
Is that the one? So he actually, Josh had three in a row, and then you got one back. Okay, I got
Correct.
you. I
Yep,
got
yep.
you. Well, just don't pay attention to this chart, and just know that there is another Pips icon that is down in Royce's quarters, the Quant quarters.
Can we talk about how close that was, though? Really?
Yeah, let's do that. So what's the current price, by the way?
It just
Josh?
ticked back over 50.
No,
Exactly.
it's not. It's 49.83 at this.
Okay,
very
well, I didn't screenshot it
It's
5
going
seconds
back and
ago.
forth then. No, it's going back and forth. So it was just under 50 at the close, which is when it counts. And then it went over 50 after close, and now it's back down below. It's just taunting Josh.
Lost by a rounding error.
Probably so. You probably got lost by things
Mhm.
going to dark pool versus not. And that's why. Probably options related. I don't know. Who knows? But yeah, it hung right there at 50. And Royce was able to pull it out.
I saw it coming, though. We all saw it coming last week that it was going to go up and come back down. We just didn't know how far down it would go.
And the timeline, yeah. So that's the thing, and it's what it's all about. So I will update at least the count, even though we might have the right scoreboard here. But we've got me at 3. We have Josh at 7, Daniel at 3, and now Royce at 6. So going into the last week, Josh still could be tied. And the difference this week is that Royce gets to pick what it is that we are going to do. And he's that was an evil laugh, I think. Wow. How long?
Underdog secret.
Yeah. So then he also gets to pick. He also gets to pick who gets to go first and all that stuff. Hopefully, with the last time that's going to do because when we start a new season, season 3. So Royce, what is your pick this week?
Let's go. And I'm picking because I did AAON. I'm going all the way to opposite end. I'm going Z back to Zillow.
We've done that one before a while back, I think.
A while back.
Yes.
And this is where we are, just waiting for my dashboard to appear. There's my dashboard. Yes. All right. So we have a range between $76 and $90. So 76 to 90.
Volatility.
Lots of volatility. So what is that? 76, that's 14, more or less. So everybody gets 350.
You said 76 to 90?
Yeah.
All right. And then you did the
350 a piece.
4 divided by 4. So what'd you say?
350 a piece. So from 76 to 79.50, 79.50 to 82.50. 83. 83.
83.
And then Yeah. And then 83 to
8650.
8650.
And
And then 90. Yeah, 8650 to 90.
Alrighty. And if you choose, you get to go first, or if you choose someone else.
I'm letting Daniel go first.
I know there's a strategy here. So yeah, that's so he can capture a chunk of the channel to have the most opportunity.
Or he's just eliminating one that he's eliminating one that he knows it's not going to be.
No, he's
Hey.
that means I get to go next. Yay. No,
He's like,
what he's doing is he's already talked to Daniel and told him to pick X so he can pick the next channel. That's what he's doing.
Darin, insider trading is illegal. Come on.
Yeah.
Come on. We don't do that here.
Oh, so that's why you left Golden.
That could be
not my division, sir.
What's that, Goldman? I mean, what's up, Goldman? I mean, what's up? I mean, what's up, Goldman? All right, so Daniel, you're first.
I'll take. Oh man, the pressure's on, huh?
Yep, you got this.
I want the first block up from the current price level.
Okay, so that would be
83 to 8650.
Yes.
83, 86,
Yes.
50. Okay, so all right.
Royce?
No, Darin.
Are you serious?
Absolutely.
This is some diabolical. There's some diabolical reason that he has mathed out in his brain.
That's what I'm saying. He's eliminating the options that he knows it's not going to be. So it's like,
that means that
now it's just
so
a coin flip from here on out.
No, there is no way it's going to stay up here. I'm going to say it's going down. It's going down. Anyway.
Meet me at the club.
Thank
Going
you.
down.
Thank you. Is he
You're
dancing? I can't see the charts up. All right. Let's go. You know what? I'm gonna go to the very bottom. And hope I foiled his plan that he had. Who's next, Royce?
I'm gonna let Josh actually pick the next one.
I'll take right above Darin.
Right
Yes,
above
that's
there.
what I want you to take. That's what I want you to take.
All right. So that
Did
means
your
I have
plan work,
top.
Royce?
Yep,
Yeah.
it worked completely like I wanted to. I wanted the top.
Are you serious?
Mm-hmm.
Well, now that we've picked it, you can say why and show it.
Well, the irony is like that channel is actually the exact one I wanted too. So like I don't know how
almost
you
did it, but I
managed
went
to
ahead
do
and go to
this,
the
but,
rest. So we got the
like I
chart.
literally got the channel that I
There's
wanted.
several things. Anytime basically volatility gets very thin in the 15, 30 minute time frame, basically I watch the compass and the momentum line. And anytime that happens, typically the first reaction should be a pivot to the downside. But overall, we should wind up going up longer term. So drawing it out, I'm expecting it to basically hit somewhere in here and then catapult itself up. And I'm going to go up. I'm going to walk up this and basically see how basically we got the same things going over here. There's still too much room and probability expanding for the trend top. So a little push down shouldn't hurt us very much. Looking at this guy over here, that means we also are going to find support on our compass line, which is something right about 81 and some change on the 4-hour time frame. And as long as the candles can stay above the compass line, we keep going up. Where it tops out, somewhere around 89-ish. So basically, I'm expecting it to get somewhere stuck between 88 and 89 before the end of next week. Now, if it lands there before Wednesday, great. If it doesn't, then hey.
That's always the thing is the timing. And
but not sure if you notice, Daniel and I both have the top channels.
Oh, I know. So it depends on how much that bounce is off of that trampoline.
Mm-hmm.
The also it could also be a some kind of what we need, Josh, is a macro event to temporarily push it down.
No, we don't. We really don't.
Temporarily, no.
Come on. He wants a Nancy Kerrigan Kim Semescal.
Go for the
Maybe
knees. No, yeah.
A wiggle or two is all you need.
Well, I mean, it could be a temporary, just a 2 or 3 day thing. It'll get past Wednesday, and then it bounces up, and we say, "Good job, you guys said it right." But that was after Wednesday. That's all we need.
Shame.
And the last thing I want is Daniel to win, because I do not want to be the big bottom.
That's where
No
I'm at.
offense.
He's basically
No
30
offense.
cents from starting that. So let's
Yeah,
go.
To me, that would be just like winning. You know?
Right?
More than a moral victory. Okay, I got you. Is there such thing as a moral defeat? Because it ain't gonna happen this time for sure. I don't think so at all. All right, guys, appreciate you guys coming in. Who knows what we're going to talk about next week? That's the great thing about this administration. We'll just leave it there. And follow up after the last administration. Both of those things make for very volatile possible times, especially as we keep sweeping things under the rug and as we keep just waiting for that bubble to keep expanding. And at some point, that tension has to pop. And we get to start a new season too after that too. So season 3 of what we just went over.
Season 3.
So
we made it.
maybe everything will explode. The doomsday clock. Well, we don't want to go all the way to the doomsday clock, but we'll take the bubble popping, and then whatever happens after that. All right. To end on a great note, nice positive note. We can make money on the way up, and we can make the money on the way down. Remember, so if it's going down, we can make money either way. And Pips is helping us a lot by doing that. So, all right, guys, we will see you next week.
See you next week, guys.
Hey, good Wi-Fi there, Philippines. All right, bye-bye.
I know, right? Brought to you by Starlink.
That's right.
Hey, that's what I'm talking about.
I'll listen to my 3 things tomorrow. I'll talk about Starlink and Apple and T-Mobile. You'll know what I'm talking about. All right, talk to you later. Bye.
Later. Bye.